One phone call to your bank could help you recover hundreds of dollars in unfair fees. What if a single phone call to your bank could put hundreds or even more than $1,000 back in your pocket? Most seniors never make this call, not because they are unwilling to question their bank, but because they have never been told the right way to do it. Many customers unknowingly pay monthly maintenance charges, overdraft fees, and other account costs that may have been incorrectly applied, poorly disclosed, or subject to consumer protection laws. Simply telling a bank representative that a fee feels unfair rarely leads to meaningful results. However, using the correct legal language and referencing the appropriate federal regulations can often lead to a completely different response. Banks train their customer service teams to handle routine complaints quickly, but when a customer identifies a specific regulatory issue, the matter is typically reviewed by the bank's compliance department. That is where many legitimate fee disputes receive serious attention. In this guide, you'll learn the exact wording to use when discussing 5 common bank fee categories that may qualify for refunds. You'll also understand why automated banking systems frequently apply fees without reviewing whether customers qualify for exemptions or whether the required disclosures were provided. If you've ever accepted a one-time courtesy refund or believed large national banks never reverse fees, you may be surprised to learn that many institutions are far more responsive when customers understand their legal rights. Knowing the rules and how to reference them can make all the difference. Throughout this guide, you'll discover practical, easy-to-follow strategies that can help you challenge questionable bank charges with confidence and potentially recover money that should never have been taken from your account in the first place. For each of the 5 fee categories, I'll provide the exact words you can use when speaking with your bank. These aren't generic suggestions. They're carefully structured statements that reference the appropriate consumer protection laws and clearly explain the refund you're requesting. You'll also learn what to do if your initial request is denied. Many customers stop after hearing no from the first representative, but that doesn't have to be the end of the conversation. I'll explain how to escalate the issue effectively, including the language that can be used when filing a complaint with the Consumer Financial Protection Bureau, CFPB, which often prompts a formal response within a matter of weeks. In addition, we'll cover 2 valuable strategies that can significantly increase the amount you may be able to recover. You'll learn how far back you can request refunds under applicable rules and discover a simple sentence that often results in your call being transferred directly to a supervisor or compliance specialist. Script number 1. Requesting a refund for monthly maintenance fees. Understanding the common misconception. Many seniors assume that a monthly maintenance fee is simply the unavoidable cost of having a checking account. In reality, that is often not the case. Most banks offer several ways to qualify for a fee waiver. These commonly include maintaining a minimum account balance, receiving qualifying direct deposits, or meeting age requirements for senior accounts. Unfortunately, customers frequently continue paying monthly fees even after meeting one of these requirements. Because banks rely heavily on automated systems, fees are often charged by default. Unless a customer notices the problem and requests a review, the charges may continue month after month. Know your rights. Federal disclosure rules require banks to clearly explain account fees and every condition that qualifies customers for a fee waiver. If your account satisfied those conditions but the bank continued charging monthly maintenance fees, you may have grounds to request a refund. The issue isn't simply about bank policy, it's about whether the account agreement was followed correctly. If you receive Social Security direct deposit. For many retirees, this is the strongest argument. Most major banks automatically waive monthly maintenance fees once a qualifying direct deposit, often around $500 or more each month, is received. Since Social Security benefits are typically deposited electronically, many seniors already meet this requirement without realizing it. If your Social Security payments have been deposited into the same account while monthly maintenance fees continued to be deducted, it's worth asking the bank to review those charges. If you maintain higher account balances, customers with larger savings should review their account balance requirements. Many checking accounts eliminate monthly fees when combined balances across eligible accounts remain above a specified threshold. If your balances consistently exceeded that requirement but fees were still deducted, you may also qualify for reimbursement. What to say when you call. When speaking with your bank, remain polite, professional, and specific. Explain that your account met the published requirements for a monthly fee waiver and request a review of all maintenance fees charged during the period you qualified. Ask that the matter be referred to the bank's fee resolution or compliance department, as those teams typically handle issues involving account agreements and regulatory requirements. Requesting the compliance department often changes how the case is reviewed because it moves beyond routine customer service and into a formal account examination. Possible refund. Amount monthly maintenance fees commonly range between $12 and $25. Depending on how long the fees were charged, customers who qualify for reimbursement may recover several $100s. Even 2 years of unnecessary fees can add up to between approximately $300 and $600, making this one of the most valuable refund opportunities for many retirees. Script number 2. Overdraft fees that may not have been properly authorized. Another common misunderstanding. Many account holders believe that every overdraft fee is automatically valid whenever they spend more money than is available in their checking account. However, federal consumer protection rules require banks to obtain a customer's affirmative consent before charging overdraft fees on certain debit card purchases and ATM withdrawals. If you never agreed to that overdraft service, some of those fees may deserve a closer review. Why this matters: banks cannot simply assume that every customer wants overdraft coverage for debit card transactions. Customers generally must choose to participate before those particular fees can be charged. If you are unsure whether you ever opted into overdraft protection, you have the right to ask your bank to verify your authorization and review any fees that resulted from debit card or ATM transactions. Knowing whether proper authorization exists can be the first step toward recovering charges that may not have been applied correctly. Script number 2. Requesting a refund for unauthorized overdraft fees. Understanding the rule. Many people believe that every overdraft fee charged by a bank is automatically valid. However, federal consumer protection rules place important limits on when banks can charge these fees. For one-time debit card purchases and ATM withdrawals, banks generally must receive your clear permission before enrolling you in overdraft coverage. This consent is typically provided through a signed opt-in agreement. If you never authorize this service, the bank should be able to produce documentation showing that you did. If the bank cannot verify your authorization, you have reason to request a review of the overdraft fees associated with those transactions. Why this matters for retirees. For seniors living on fixed monthly income, timing can be everything. Bills may be due a few days before Social Security or pension payments arrive, resulting in temporary overdrafts. While this situation is common, it doesn't necessarily mean every overdraft fee was properly assessed. If you never knowingly enrolled in overdraft protection for debit card purchases or ATM withdrawals, ask your bank to verify whether it has your signed authorization on file. Retirees with larger account balances may experience overdrafts less frequently, but the same consumer protections still apply. Regardless of income level, every customer has the right to know whether overdraft fees were charged in accordance with the account agreement and applicable regulations. What to say during the call. When speaking with your bank, explain that you are requesting documentation showing when you authorized overdraft coverage for debit card and ATM transactions. Ask the representative to provide a copy of any signed enrollment form or other documentation that confirms your consent. If the bank cannot locate that authorization, request that all applicable overdraft fees from the review period be refunded and ask that your case be forwarded to the compliance department for further review. Potential refund overdraft fees at many banks range between $25 and $35 each. Even a handful of improperly charged fees can total several $100s over time, making this another worthwhile category to review. Script number 3. Paper statement fees added without proper notice, the misconception. Over the past several years, many banks introduced monthly charges for customers who continue receiving paper statements. These fees are often presented as part of an effort to encourage electronic banking. What many customers don't realize is that when a bank introduces a new fee on an existing account, customers should receive clear advance notice before the fee begins. Simply mentioning the new charge in routine account paperwork may not always provide the level of notice customers expect. Why you should review these charges. If you've been paying paper statement fees for years, it's worth asking your bank when and how it notified you about the change. Request copies of the original notice, including when it was sent, how it was delivered, and whether your account records show that you accepted the updated fee schedule. Many customers never realize these records exist, yet they can help determine whether the fee was introduced according to the bank's own procedures. If you depend on paper statements, many seniors prefer paper statements because they are easier to review, store, and use for financial records. If you're one of them, you should not assume that paying a monthly paper statement fee is unavoidable. Ask your bank to explain exactly when the fee was added to your account and whether you received advance notice before it took effect. If you have multiple accounts, even a small monthly fee can become significant over time when charged across several checking, savings, or retirement accounts. A charge of only a few dollars per month may not seem important, but after several years and multiple accounts, the total amount paid can become substantial. What to say when you call. Tell the representative that you would like documentation showing when your bank first notified you about the paper statement fee. Request the date the notice was issued, how it was delivered, and whether the bank has records confirming that you were informed before the fee was applied. If the bank cannot clearly document that process, ask that the charges be reviewed and request that your case be transferred to the compliance department for further evaluation. Possible refund. Although paper statement fees are usually modest, often between $1 and $5 per month, they can accumulate over several years. Customers with multiple accounts may discover that these small monthly charges have added up to a meaningful amount worth reviewing. Potential refund for paper statement fees. Paper statement fees may seem insignificant at first, but they can add up over time. A monthly charge of just $3 totals approximately $72 over 2 years for a single account. If you have several accounts at the same bank, the combined refund could exceed $200. Because these fees are relatively small, banks often resolve disputes quickly once customers request documentation showing that proper notice was provided before the fee was introduced. Script number 4. Savings account excess transaction fees. The common misunderstanding. For many years, savings accounts were limited to 6 certain types of withdrawals or transfers each month under a federal banking rule. As a result, many customers became accustomed to paying excess transaction fees whenever they exceeded that limit. What many people don't realize is that the federal restriction was removed in 2020. Although some banks chose to keep their own transaction limits, those limits must now be based on the bank's account agreement rather than the former federal requirement. If your bank continued charging transaction fees based solely on the old federal rule without clearly updating its account terms, those charges deserve closer review. Understanding the policy today, banks may establish their own limits for savings account transactions, but customers should be able to find those limits clearly explained in the current account agreement. Review your savings account disclosure carefully. If the transaction limit simply references the former federal rule without establishing an independent bank policy, ask the bank to explain the basis for any excess transaction fees charged after the federal limit was suspended. What to say when you call. Tell the representative that you would like a review of excess transaction fees charged to your savings account. Ask the bank to explain whether those fees were based on its current account agreement or on the former federal transaction limit. Request copies of the relevant account disclosures and ask that the matter be reviewed by the compliance department if necessary. Possible refund excess transaction fees often range from $5 to $15 each. While a single charge may not seem significant, repeated fees over several years can add up, especially for customers who regularly transfer funds between accounts. Script number 5, minimum balance fees, despite qualifying, direct deposits. The misconception: minimum balance fees are among the most common charges found on checking accounts. Many customers assume these fees automatically apply whenever their balance drops below the required threshold. In reality, many account agreements include exceptions. One of the most common is a qualifying direct deposit, including recurring Social Security or pension payments. If your account met the bank's direct deposit requirements, you may have qualified for a waiver even during months when your balance temporarily fell below the minimum requirement. Why this matters. Banks typically calculate minimum balance fees using automated systems. Those systems may focus on account balances without properly recognizing that a qualifying direct deposit should have prevented the fee from being charged. Your own account agreement is often the strongest evidence. If it states that qualifying direct deposits eliminate the minimum balance fee, those terms should be applied consistently. Who should review this? For retirees living on fixed income, account balances often fluctuate throughout the month. It's common for balances to fall below the minimum before the next Social Security or pension deposit arrives. If your account received qualifying direct deposits during those same months, review your statements carefully to determine whether minimum balance fees were still deducted. Customers who consistently maintain higher balances are less likely to encounter this issue, but anyone who receives qualifying direct deposits should confirm that all available fee waivers have been applied correctly. What to say during the call. Explain that your account agreement states that qualifying direct deposits waive the minimum balance fee. Point out that your Social Security or other eligible direct deposits have been credited to the account during the months when the fee was charged. Request that the bank review every affected month, refund any fees that should have been waived, and transfer your request to the compliance department if additional review is required. Potential refund minimum balance fees are commonly assessed every month, meaning even a modest monthly charge can accumulate into hundreds of dollars over several years. Customers who qualify for the waiver but continued paying these fees may be entitled to a substantial refund after a successful account review. Potential refund for minimum balance fees. Minimum balance fees typically range from $8 to $15 per month. If you qualified for a fee waiver but continued paying a $12 monthly charge, a 2-year review could result in approximately $288 in refunded fees. When combined with refunds from monthly maintenance fees discussed earlier, many customers could potentially recover well over $600 from these two fee categories alone. The 5 refund strategies covered so far represent the most common opportunities for customers, especially retirees, to identify and recover unnecessary bank fees. The next 2 sections focus on situations where your first request is denied and on how to maximize the time period covered by your refund request. Bonus strategy. Number 1. If your bank says no, if your bank refuses your refund request or offers only a partial reimbursement, don't assume the matter is closed. Initial decisions are often made by customer service representatives who may not have authority to conduct a full compliance review. In these situations, you can submit a formal complaint through the Consumer Financial Protection Bureau, CFPB. This process sends your complaint directly to the bank's regulatory response team rather than ordinary customer service. When filing your complaint, include the type of fee you're disputing, the dates the charges occurred, the total amount involved, the consumer protection law or account agreement you referenced, a summary of the bank's response, the specific resolution you're requesting. A well-documented complaint often receives far more attention than a routine phone call because it becomes part of the institution's formal regulatory record. Bonus strategy number 2. How far back can you request a refund? One of the most common questions is how many months or years a customer can ask the bank to review. The answer depends on several factors, including the type of fee involved, the account agreement, and applicable state and federal laws. As a practical starting point, many customers request a review covering the previous 2 years. Banks frequently evaluate requests within that time frame before considering older charges. If the bank agrees to refund only a shorter period, politely ask whether additional months can be reviewed based on the account history and the terms of your account agreement. When necessary, you can also include this request in a formal CFPB complaint, so the institution's compliance team reviews the complete timeline. Hashtag bringing everything together. The key lesson throughout this guide is simple. Banks process millions of transactions through automated systems. Those systems apply fees based on preset rules, but they don't always recognize every exception, waiver, or account-specific qualification. That's why it's important to review your statements, understand your account agreement, and ask questions whenever a fee seems inconsistent with the terms of your account. The 5 scripts you've learned provide a structured way to begin those conversations. They also encourage your bank to route the matter to its compliance department when additional review is appropriate. If your initial request is unsuccessful, a formal CFPB complaint offers another avenue for resolving the issue. Many customers discover that reviewing several common fee categories, including maintenance fees, overdraft charges, paper statement fees, savings account transaction fees, and minimum balance fees, can result in meaningful refunds over time. Final thoughts. If you found these strategies helpful, consider sharing them with a family member, friend, or another retiree who may also be paying unnecessary bank fees without realizing it. A short conversation with the bank, supported by a careful review of account records, may help someone recover money that would otherwise remain unnoticed. In the next guide, we'll discuss an often overlooked Social Security benefit that many eligible retirees never claim simply because they don't know it exists or don't ask the right questions. Understanding your benefits can be just as valuable as reviewing your bank account and could make a meaningful difference to your retirement income.